Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kainat Chenwala from Kotak Securities Commodities Research Desk. And like in every episode, we will be navigating through the ever-changing landscape of commodity markets, examining the events that influence market sentiments, and uncover the latest trends. So let's get started. So, the recent US jobs report has intensified recession concerns, causing considerable volatility in global markets last week. The report revealed that US employers added only 1,14,000 jobs in July, significantly below the expected 1,75,000 increase, indicating a sharp slowdown in hiring. The unemployment rate rose to 4.3%, surpassing the anticipated 4.1% and marking the highest level in nearly 3 years. Additionally, average hourly earnings increased by only 0.2% for the month of July and 3.6% year on year, both below forecasts. Prior to the jobs report, contraction in US manufacturing PMI for the fourth consecutive month in July, coupled with an increase in jobless claims, had already raised alarms about a potential economic downturn in the US. As a result of these developments, the dollar fell to its lowest level since March, while major US equity benchmarks dropped sharply from record highs after the jobs report. Global markets were affected, with Asian markets, particularly the Nikkei, experiencing their second largest single-day decline last week, closing the week down 5%, owing to sharp sell-off on the Wall Street and a stronger yen. In response to the economic uncertainty, COMEX Gold December futures surged to a record high of $2,522 per ounce, supported by safe haven buying. The dollars declined to a 4-month low of 103.12, and a drop in US 10-year Treasury yields to 3.78% also contributed to gold's rally. Despite closing the week below $2,500 per ounce, gold prices are likely to remain buoyed in the near term as expectations grow that the Federal Reserve will soon begin cutting interest rates. COMEX silver also saw a 2% increase last week, in line with gold's gains and limited downside in base metals, although it may face pullback risk unless China implements further stimulus measures to support the economy. On the technical front, if we take a look at the 4-hourly chart, MCX Silver September futures has given a downward breakout of its double top chart pattern, affirming bearish influence. Also, price has sustained below its 50-period SMA, currently hovering around Rs 85,103, dynamic resistance. Next support for the counter is placed at 80,200, below which major support is placed at 78,500 rupees. Meanwhile, WTI crude oil prices fell to a 2-month low of $73.16 per barrel and closed the week lower by around 4%. The decline was driven by signs of weakening factory activity in the US and China, combined with recession fears in the US impacting demand prospects. Also, OPEC Plus plans to revive halted production in the fourth quarter, adding approximately 540,000 barrels per day, further complicated the market outlook. On the technical front, if we take a look at MCX crude oil August on the daily chart, it has formed a series of lower highs and lower lows. In addition, the price has breached below its previous swing low of 6,258 rupees, affirming negative momentum. Next support for the counter is placed at Rs 5850, below which major support is placed at Rs 5600. Now, the faster than expected cooling of the labor market has unsettled investors, raising concerns that the Federal Reserve may have delayed rate cuts too long, thereby risking economic growth amid elevated borrowing costs. This has dampened hopes of a soft landing and increased speculation regarding a 50 bips rate cut at the Fed's September meeting. Looking forward, we are entering a quieter week with a focus on services PMI from major global economies, US jobless claims, and Chinese inflation figures. An uptick in US jobless claims following a 1-year high level hit last week could indicate a sharper slowdown and prompt a strong reaction from market participants. Overall, recent US data has fueled fears of recession, shaking global markets, and hence upcoming data releases may keep markets on edge. On that note, we conclude this edition of Commodity Audiocast, and we trust that we've offered you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.